but she also is have a clear understanding and know all the do's and don'ts when it comes to far as taxes and what to write off and the do's and don'ts, making sure that you're in compliance relating to far as your business. I want to introduce to some and present to others. Not only Elaine Atkins, she has her own business as an accountant. She's well known with the IRS. She has worked there as well, and I just want to move this side and allow her to continue this presentation and share anything that she needs to share with us as we're beginning the new tax season starting today. Go on, Elaine.
Well, thank you for having me. I appreciate this opportunity. And again, forgive me for having to reschedule from the last month. But I do want to take a moment to thank you, Pastor Dukes, for this opportunity. This is one of my favorite subjects. I'm very passionate about taxes, and I love sharing information where I can to help my fellow taxpayers and business partners. One of the things we'll do in this presentation, I'm going to go through some tax benefits for your home-based business. I will focus on travel, but the information I'm going to cover, it could be for any business. If you have any other home-based businesses, or you in the gig economy, Uber, Lyft, or any other type of home-based business that you have, what I will cover, it aligns with all of that. So it's not just one particular entity, but the focus will be around travel for this particular presentation. But again, the information I share, it could be utilized for any home-based business. Also, what I'm going to do to save on the bandwidth, I'm going to cut my camera off. I'm going to go through the presentation. Feel free to put your questions or comments in the chat. And then what I'll do at the end of the presentation, we'll come back on camera and address the questions and any other comments you may have. Okay, so this time I'm going to share my screen. And if you can put in the comment whether you can see my screen or not, that would be great. Let me get ready to do that. All right, can you all see my screen? Okay, perfect. Okay, so what I'm going to do, like I said, I'm going to jump right into the presentation again. So you don't forget any questions you may have, just put it in the chat or write it down. And again, we'll try to address all the questions at the end of the presentation. Okay. All right. So again, welcome to tax benefits for your home-based business. As Pastor Dukes mentioned at the beginning, I'm Elaine Atkins. I am an accountant. As you can see, my information is on the screen, so feel free to take a screenshot if you like. But I specialize in income tax services, small business, corporations, partnerships, quite a bit. I do all types of tax returns. So again, my contact information here on the screen. It's Marion Enterprises LLC at gmail.com. My website is the-taxlady.com. And of course, my mobile and office and fax number is on the screen as well. All right, so getting right into this. So one of the things, and everything I'm going to cover today is going to lead right into some breakdowns of how having a business will benefit you. Okay, so I'm going to start off with the standard deduction. I'd like to do some education around some basic information as a taxpayer. Taxpayers, we all have to, when you file your taxes, there's a standard deduction for us all. Okay, so for 2023, which is the calendar year that we just finished up with, that's the tax season. We're in tax season 2024, but you'll be filing your 2023 calendar year income tax returns. And so for 2023, one of the things I wanted to point out is the standard deduction. So if you're married filing joint, which means you're legally married in the eyes of the court, then your standard deduction is $27,700. Okay, and that is actually the official filing status for married couples. When you're married, you're supposed to file married filing joint. And there is an option where you can file married filing separately when you've been separated and apart, living in different places. And that's an option as well, which is the third bullet that you see here on the screen. So if you're single or married filing separate, the standard deduction for 2023 is $13,850. As you see, it has increased to $900 from last year, from 2022. Same thing with married filing joint. It has increased $1,800. Then head of household, that's where you are claiming dependents, children, or your parents, your qualified dependents, where you are providing more than half of their support. Your filing status could be you're single, but you're providing more than half of the support of others, like you taking care of them, your children, or your children away at college, or your parents. That's head of household. So that's the filing status you would select for head of household. And that for 2023, the standard deduction is $20,800, and it increased $1,400. Again, we're gonna look at these standard deductions as it apply in some formulas later on in the presentation. So that's another reason why I want to point out the standard deductions. Some other, so getting into the home-based business expenses and benefits, I want to touch on some things, and again, we'll break some of these down as we go through the slides. But some of the benefits is writing off a portion of your mortgage interest. If you're a homeowner, if you have an apartment, you can write off a portion of your rent. And then, of course, your utilities, whether you are a homeowner or have an apartment, you can write off a portion of your utilities. And again, I will break that down as well. Advertising and marketing. Of course, you want to market and advertise your business. So the funds that you spend towards that's a tax write-off. Transportation vehicle, going to your presentation, going to seminars, going to meetings, learning more about your business, being educated, having to drive or get an Uber or Lyft, going to conduct business as it relates to your business. That's a tax write-off as well. Buying supplies, again, education. If you're taking continuing education courses, learning more about your business, becoming more of an expert in your field, and there's a cost to that. Guess what? You get to write that off under education. Children, you can claim your children. You can put your children on payroll. It could be your child or someone else's child. You can put them on payroll. You can put them on payroll as an independent contractor, and you can pay them up to the amount of the standard deduction for a single individual, which was at $13,000. But of course, you got to make sure that what you're paying them is reasonable for that type of job. Okay, you don't want to pay a child that's 14 years old $13,000, for janitorial services, which is taking out the trash in your house. You got to be reasonable, document exactly what you're paying them, what it's for, and how often you want to pay them, and keep up with it. So basically, have a personnel file on the children. And again, they will file a tax return, but guess what? If they're being claimed on their parents' return, it basically just wash itself out, where the child is not paying taxes on that return when they file their return, and you still get a business expense for claiming for paying that child to conduct those services that you has hired them to do. And then the parents still get to claim the child on their taxes because that's their child, and they're still under the age as a dependent living in that parent household. So it's a win-win for everyone in that situation. All right, home business expenses. I want to touch on a few things here where it's no longer confined to one room in your house. All general household bills are a business expense. So an example, let's say your total home is 2,800 square feet, and you use about 40% of your home, like 1,100 square footage of your home for your office space. That's 40%. So 40% of your mortgage interest you get, or your rent each month, you get to claim your real estate taxes, your property taxes, your homeowners or renters insurance, maintenance. Again, homeowners insurance, your utilities, your internet, your alarm system, your cable, your house cleaning, gas, water, electric, home warranty, anything that you pay that's towards your utilities that help run your home and keep it managed. In this particular example, you would claim 40% towards your business. There is a simplified method where you could just take the 1,500 square footage and claim 300 square feet for your office, where you don't have to maintain the receipts. So those are two options. The first one that I described, where you have the mortgage interest and the rent and taxes, your real estate taxes and property taxes and utilities. Of course, you'll probably keep those documents anyway, especially if you itemize. But you'll keep those as part of your documentation for your home office deduction. And again, the second option is the simplified method. You just claim 300 square feet of your home as your home office. General business expenses. 100% write-off for businesses. Of course, if you buy office furniture or office supplies for your home office, of course, you need a desk and a chair, maybe a filing cabinet, some writing pads, or things of that nature. And of course, your advertising. You want to purchase your business cards or online ads or hosting fees. All of that is 100% write-off. Cell phone. Put your cell phone number on your business cards. Always talk business on your calls. Computer, laptop, printer, shredder, scanners. If you're conducting private business events in your home, maybe you need a larger size TV because so people could see, right? If that's what you bought that TV for your presentation, that's another write-off. Shipping. If you use Amazon, maybe you don't have Amazon Prime, or you have other companies that you order your supplies or office furniture from, they charge you a shipping fee. You get to claim that shipping fee. Sales tax. You can claim the sales tax that you're being charged when you purchase those items as well. So again, as I mentioned at the beginning, all of these topics that I'm covering, it is for any type of self-employment, independent contractor, home-based businesses that are out there today. But again, we're going to focus on travel today. So if you have a travel business, we're going to kind of focus on that today. But even with this, your travel expenses, again, any independent contract work you're doing, travel expenses, it has to be ordinary expenses that is related and accepted in your trade or your business that you have. It's a necessary expense, something that you got to have for your business. And the expense don't have to be required to be considered necessary. So I say all that to say, based on the business and profession of your job, again, we're going to focus on travel. Some of your, so again, the business is travel that we're going to focus on. In your profession, you're a professional travel agent, and your job is to book travel, continue your education, and development purposes, do research for travel, all those great things, right? So with that being said, every time you leave home could be a potential business expense. You could meet a potential client at the convenience store. Guess what? Well, when you leave your home and go to a convenience store and you have a conversation with someone, get their contact information, and that trip that you took from your home to that convenience store are now business miles. So you will want to track that. Some other travel expenses, if you have expenses for, again, I just touched on the transportation. So again, if you're traveling by airplane, this is still from the publication on the IRS website. They have updated, they still, refer to train, buses. It's still some trains, but, buses, car between your home and your business destination. Again, those are things that you can claim. Taxi, commuter bus, of course, Uber, Lyft, that's not on here, but that's still like a taxi. Baggage and shipping. So let's say you have an event somewhere, maybe in another state or something, you want to ship your products and resource materials in advance. That's something that you can write off as well. Your car, your mileage, we're going to talk about mileage, lodging, your hotel fees, your meals while you're away, and travel status. And travel status, again, is when you're away from home and you have to stay overnight, you need to eat. So it covers your meals. Cleaning, let's say you got to get your clothes dry cleaned while you're away on your on your business trip. So these are just some things, and also tips. If you want to tip your Uber driver, Lyft driver, or at the airport, you want to leave a tip. Those things you can write off, though. So that is included under the travel expenses. So what has increased for calendar year 23 when you file your taxes this year is the mileage standard. This is amazing. When you have a vehicle and you use your vehicle for your business and you're driving from event to event or meeting your clients or potential clients, beginning of January 1, 2023 last year, this is huge. The standard mileage rate has increased a lot. So I strongly encourage you all to get you a mileage app and just keep it turned on. It will automatically track your miles for you. There's a Mile IQ app for Droid phones, and I think it's they could just say mile tracker on the iPhones, and it will automatically track your miles for you. I strongly encourage you to download those apps, depending on what phone you have. And then once a week or once a month, you just go through it and swipe left or right, whether it's a business trip or a personal trip. I promise you, you will save a lot of money when it comes to tracking your business miles. So for this year, when you file your tax, you get 65.5 cents per mile. This is huge. And a lot of people it's like, they didn't track my miles. Even if you didn't have the app, if you got a calendar and you know what events you went to, you can work backwards and manually document how many miles you drove to an event or, for your trips. But this is huge. I strongly encourage this. I can't stress it enough for the mileage for your vehicle. Children expenses. No federal employment taxes on the kids' wages, no federal income tax on the first 13,850 of the kids' wages, valuable business deductions for you, valuable work experience for the kid. Money is kept in the family instead of going to outsiders. Your child can set aside some or all the wages and invest the money. So hopefully that cash stash can eventually be used to help pay for college, which means you won't have to shell out as much cash or whatever the kid want to use the funds for. But this is a great way to save money. I mean, especially if you're giving your children allowances anyway, just convert it into put them on payroll, make them an independent contractor. So yeah, this is awesome. When my children were underage, I definitely had them as independent contractors working for me in my business. So it was great. Education expenses, kind of touched on that. Ordinary necessary expenses paid for the cost of the education and training of your employees are deductible. It's also deductible for you. You can also deduct the cost of your own education, including certain related travel related to your trade or business. You must be able to show the education maintains or improves skills required in your trade or business, or that is required by law or regulations for keeping your license to practice status or job. So that's pretty self-explanatory. So again, as long as it's related to your business, again, if you think about travel, like if you're trying to maintain your Clear card or some of these other certifications or statuses, again, you can claim that as well. Other information, you always want to make sure you keep good records, get a set of ledgers or mobile app, get receipts for everything you possibly can. And if you don't have receipts, keep a diary, make notes about your expenses, like on your calendar or something. Set up a good filing system. You always want to keep your records for at least 3 years from the date you file your returns. Personally, I keep my tax records forever because you just never know when it comes to the Internal Revenue Service or the state departments. All right. So with all that being said, I want to break down a home-based business. I have an example for you. That's why I wanted to kind of talk about some expenses, and those are general expenses that you can take advantage of, again, for any type of business. But we was focused on travel. So let's start with this. So let's just say you were tracking your business expenses. So let's say your mortgage is $1,640 per month, and you're claiming 20% of your home for your business. So the percentage would be 20%. So you get to write off $328 per month. That's $3,900 for the year. Your utilities, so you have your electricity, gas, water, or waste. Monthly combined is $294. Again, 20% of your home is for office use. So that's $58 a month. So that's $705 for the year. Cell phone, we talked about cell phone. It could be in your company name, but if it's in your name, if you have more than one cell phone and one dedicated line, you can claim that. So in this case, this example, we're saying $127 per month of the cell phone is dedicated to the business. So we're going to claim 100% of that, 127, $1,500 annual. Mileage. Remember I talked about the miles being 63 cents now, 63 and a half cents for 2023. Let's say you drove 10,254 miles for the year for business. That percentage, 65 and a half, that's $6,700 that you don't pay taxes on for the year, just the mileage alone. That's huge. Internet, you got to have internet. You got a home-based business, right? So you have your online back office, your business to track your business and your reports. Are you doing what we're doing now? Zoom calls, right? So you need your internet. So you're paying $59 for that. And you can also have it, in this example, it's saying 100% because I could have a dedicated line. So I may have gotten a hotspot from, one of the phone companies, right? So if you got a dedicated line for your business, you can claim 100% of that. But if you only have the one line, you definitely want to take a percentage of it. Now with the cell phone and your internet, it could vary from your home utilities and the mortgage because you may be using your internet more often than the space in your home, right? So you may be using your internet and cell phone 75% of the time. So those can be adjusted. Cable, in the case of travel, you can claim a portion of your cable. It would be the same rate as the home, your mortgage and your utilities, which is at 20%. And again, cable, you have the weather channel, you have travel channels on your cable, most people based on the cable plan that you have. So you will want to check those out, right? That's continuing education. You may have a trip you're putting together. You may need to check out the weather to see what the weather is like during that certain time frame for your client, right? So again, that is something. Not all home-based businesses get to claim cable, but travel is one of them that can claim cable. And cable, like your streaming apps, Netflix, or any of those that you go to check out the weather, learn more about your business and travel, getting travel advice, looking at different things of as it relates to your business. So that's how you tie that back to your business. You have to have that business description and purpose to tie it back. Travel, of course, the purpose of your business in this example again is travel. So of course you want to document your travel. If you get to write 100% of your travel off, this person was traveling, spending $487 a month in travel. Of course, that's not always going to be the same. This is just an example. Every month probably different. But whatever your travel expense is for your business, it's 100% write-off. And then again, this person actually put their child on payroll. They didn't pay the whole 13,000. I mean, you want to go up to 13, but again, you want to be reasonable of the duties and responsibilities of what you're assigning to the child, and keep in mind of the age. So you may have to check out information on the Department of Labor website on what type of work you can provide children at a certain age, and the average pay rate. That's how or what I would recommend so that way you're not really getting caught up into some other issues with the government. But in this example, children as employees or independent contractor, you paid for the year $47.89. You claim 100% of that. So when you add all this up for the year, this individual taxpayer for their home-based business get to write off $30,000 and $30,672.68. That's $30,000 that they do not have to pay taxes on. Okay. So let's look at some formulas based on this. So, well, before I get to the formula, let me break down one more thing. The 2023 tax bracket. This is important. With the new tax act that was put in place starting in 2018 under President Trump, he removed those exemptions. So based on him, one of the things he removed is the personal exemptions. So we don't have personal exemptions anymore. When you have a job or you're self-employed, whatever your income is, it doesn't matter about how many dependents you're claiming or claiming yourself anymore. It's all about the tax rate, whether you are single or you're married filing joint or you're head of household. It's based on your filing status and your income, and that's it. So that's one of the major changes that he made with that tax act, which is in place from 2018 to 2025. And of course, he made some other changes, but this is one of the major ones. So with this being said, if I'm single and I made up to $11,000, then no matter how many kids I have or what I got going on, I'm single, and I made $11,000, my tax rate is 10%. So I would be responsible for paying 10% on the federal return up to this dollar amount. If I'm married filing joint, my income is between 0 and 22,000, it's 10%. Head of household, no matter how many kids I have, I'm head of household, I got 5 kids at home, my tax rate up to 15,000 is 10%. And as you see, go all the way up to 37% based on your income. So it doesn't matter what you have. I mean, it's just that simple now when it comes to the tax bracket. So again, I'm going to use this information along with the standard deduction and the home-based business breakdown and show you how this worked together. All right. So the first example I'm going to show you in this formula is, let's say I have a job, a 9-to-5, and I make $80,000 on that job. I'm single. I have no kids. I have nobody to claim but myself. So my standard deduction is $13,850. I have no business. So my taxable income is $66,150. So basically, I subtracted this $13,850 from the $80,000, and my taxable income is this $66,150. Based on the $66,150, I will go back and look at that tax rate chart to find out what my tax rate is and how much taxes I owe the federal government. So I will owe the federal government $14,553, and I would be in the 22% tax bracket. Okay, so that's how simple this is. So if you only have a job, I strongly encourage, which all of you have a business, so I'm going to show you that too. But if you know anyone that only have a job, I strongly encourage them, make sure they're taking out the max on your federal and state taxes, because if you try to file exempt or anything like that, you will more than likely 9 times out of 10 have a balance due. Okay. Here's the formula with the home-based business. So let's say you got a job, you still got that same job, you still go to work from 9 to 5, you still make the same 80,000, you're still single. Your standard deduction is 13,850, but you now have a business. So remember we talked about that 30,673. So this is my tax write-off from having that home-based business. So I now get to write off or subtract this my standard deduction from the 80, and I also get to subtract the 30,000 from the 80. So now my taxable income is $35,477 instead of $66,150. That's a big difference. My tax rate and liability, I only owe the IRS now $4,257 instead of $14,553. And I'll go down to the 12% tax bracket versus the 22. So you see the difference when how having a home-based business benefit you if you document it and track it and actually utilize and take advantage of what you have at your fingertips. And the tax system is really designed for business owners, not employees. Employees will always pay more taxes than someone that has a business. And then when you have a job and a business, that's like best of both worlds, in my opinion. All right, so let's look at another one. So in this case, same $80,000, but I'm head of household. I have 5 kids. I'm head of household. My standard deduction is $20,800. Back before the Tax Act changed, see, I could get like $4,000 per child, right? That's not the case anymore. So no matter how many kids I have, I do not receive those personal exemptions anymore. They're no longer available under this new Tax Act. So no matter that I have 5 kids, I have no business, and my taxable income is still going to be 59,250 after I subtract my standard deduction, and I still got to pay the IRS over $7,000 in taxes, and I'm in the 12% tax bracket. Now let's look at just adding the business. The same, we're gonna look at that same 30,000. We're gonna add that same 30,000 to it. Now that I have my home-based business, I still got my 5 kids. I got my standard deduction for 20,000. So I'm subtracting both of these from the 80,000. Now my taxable income is 28,527, and I only owe the IRS $3,400. And I'm still in the same tax bracket because this income fall in the same area. But guess what? My tax liability, my tax bill is much, much lower, much, much lower. Okay. And we'll look at one more married filing joint. Same thing. The married filing joint standard deduction is 27,700. One more thing I want to point out with these standard deductions. Every year they're going up, right? The Congress decide every year what your standard deductions are going to be for each filing status. And the ultimate goal is by the end of this tax act, which is, I think the last year is 2025. So tax season 26 for calendar year 25, that's the first year Congress can take a look at that tax act and make additional changes or modify, bring some things back or not, or whatever, right? But what the ultimate goal was, well, one of the ultimate goals is by the time 2025 hit, these standard deductions is basically streamlining the middle class. Middle class normally itemize on their taxes where you can take advantage of your out-of-pocket medical expenses, claiming your interest on your mortgages, charitable deductions, all of that, right? And normally, back before this tax act went into play, if you had more out-of-pocket expenses, such as the things that I named, and unreimbursed employee expenses, say you had to buy supplies or things for work, and they did not reimburse you. If it was more than your standard deduction, then you could claim it, and then you're claiming itemized deductions. Well, based on this tax act, a lot of people, and a lot of taxpayers are starting to feel the difference now, because as these standard deductions continue to increase, it's making it harder for people to itemize. Less and less taxpayers are able to itemize because they don't have a lot of mortgage interest. They don't have a lot of tithes and offerings and out-of-pocket medical expenses that add up to be more than their standard deduction. So it's getting to the point where a lot of taxpayers now are starting, the only thing they can claim is their standard deduction. So I just want to make that point that it's one thing to have the standard deduction be as high as it is, but it does impact what you can itemize going forward if your itemized deductions or itemized documentation do not exceed your standard deduction. Okay, but in this case, this is married filing joint. Their standard deduction is 27,000. They don't have a business. Their taxable income is 53,000. Their tax bill is $6,300. Then the 12% tax bracket, we'll use the same formula here and apply the business. Again, same 30,000. So you subtract the 27,700 from the 80, the 30,673 from the 80. Then the taxable income is 21,627, and the tax liability is 21,663. Big difference from owing $6,300, having no business, to having a business, tracking your business, and then being able to only owe the IRS 21,663, which is less than half of what it is if you only have a job. And then your tax rate went down to 10%. So that's huge. So just that simple, I love this stuff. It's very important as business owner to track your income and expenses and document it. Again, this is all legal that you can claim. Most people that are independent contractors or self-employed, sole proprietors, you'll use a Schedule C on your personal return, which is your 1040 with a Schedule C. But this is huge. This is huge. And I mean, and it's worth it. It really make a difference on your return. I just want to point out a few things. This has just been an example of how applying business expenses work. Each taxpayer situation is different and unique. So of course you want to seek a tax professional for consultation or preparation. And again, I did just a basic generic review of things that apply to all taxpayers, and also the basic formulas. And again, this is very true that each taxpayer situation is different and unique because again, you may have children, you may have continuing education, you may have some other credits that you can claim, you may have had federal and state taxes withheld. So you may have some other things going on that can help determine whether you owe or not owe. So again, you definitely want to make sure you seek a tax professional when you're preparing your taxes, especially if you have any questions. So other things I want to point out and share with you, 2024 tax filing season starts January the 29th. So the IRS will start accepting and processing the 2023 tax returns on Monday, 29th. And your taxes must be filed, your personal return must be filed by April the 15th. And then far as my business, we do more than just taxes. I do schedule consultations with potential clients or clients and go over your personal financial situation and give you advice on what on your particular situation. And if you go to my website, you'll see, and I'll pull it up, but I have some documents there that are free that you can download and use if you choose to. If you don't have an app that you use for your bookkeeping to keep up with your income and expenses, but there's a spreadsheet for tracking your business expenses and your personal expenses if you choose to. And then also I have a checklist on starting your business, making sure you actually make it like if you need to get your LLC or register, get your EIN with the IRS. So I have like a checklist. So I will share some of that with you now. Let me see if I can pull that up. So on my website, let's see. So it's Marion Enterprises LLC.com. Under tax services, you have the option to schedule a consultation, or you can also, if you don't have a tax preparer and you need one and you would like to seek my services, you can begin your online tax prep on my website. But if you scroll down on the tax services, you'll see where I have a Schedule C spreadsheet. But if you have a partnership or S corp, you can still use this document. And I just put some basic information on here to get you started. Where did my document go? I downloaded it. Hold on. Let's see. It disappeared. Well, let's see. Hold on. It is going to be, pull this spreadsheet up. Download. There it is. Okay, let me get this back up. Okay, let me bring it over. Come on, sweetie. Okay. And it, like I said, it's a basic spreadsheet. Of course, is if you think of any other like things that you purchase for your business, just add another row to it. You put it on for each month, but this can, something that's free that can help you track your business. Like I said, I just entered like some basic things that I know of that are pretty consistent with most home-based businesses. So that's a document here. that you can use. And it has like the home office, your auto detail, and then other notes that you want to use. Okay, so that's one document. Also there's the starting a business checklist. Again, choose the business structure, your name. So it's just pretty much a checklist. I have like information here to show you exactly what to do. This is a really good tool. This wizard is kind of like you answer the questions and it'll return you the type of structure you need to set up for your business. So it's a really cool little tool to use. Again, registering your business with the states, getting your tax ID number. Yeah, so this is a pretty cool list, and it's pretty valuable. So yeah, you can use this if as you need to. This is a really cool app as well. I have clients that use this app, and I've set this up for them too as well. But this is pretty cool for like independent contractors where mostly you're self-employed, you're sole proprietor, and you don't have to worry about, spending a whole lot of money on those more expensive apps. Uh, and the pricing on this one, I don't think it's that much. Let's see. I think it's been moved. I think it was like no more than like $7 or $8 a month for this tool. But yeah, but it's a pretty cool tool, and it'll generate your profit and loss forms for you. It's like I say, it's a pretty cool tool. I don't work for them or anything. I don't get a commission or anything for them, but I just know I've had clients to use it. And also, let's see. Let's see if there's something else. So yeah, so that's pretty much some of the things I just wanted to share with you. Regarding having a home-based business, how to save on your taxes, and how to track your business so that you can have that documentation. So if you ever were to be audited, you have that information to support and be able to send back to the IRS, because that's what it is. It boils down to documentation. What can you prove? What can you show that's related to your business? So with that being said, I will pause here and open it up for any questions anyone may have. Let's see. Let's see. Stop sharing and let me go to the chat. And all right, so you should be able to come off mute and ask any
Yes.
questions you may have.
Yes. Good evening. Hello?
Yes.
Oh, okay. I do have a question. I do have two questions.
Okay.
I'm looking to have you guys for tax services this year. This will be my first time. So, my one question is, if I have a document already in place with my expenses on it, this being the first time, can I email that to you and then from that point on use yours, or you would prefer everything transferred into the documents you just showed us?
No, feel free to use your documents. That was just something if a taxpayer didn't have anything at all to use, that was just
Okay.
something I offered. But yeah, feel free to use any documents that you have. Yeah,
Okay.
I know how to read. I know how to read them and put the expenses in the right categories.
Okay. All right. Yours is set up better than mine, but I had I had already, but this being the first time, I think I'm gonna send you what I have.
Sounds good. I'll take a look at it
Okay.
and give you any. And that's another thing. One of the other things that I do, I also I don't file anyone's taxes without having a conversation with you.
Good.
I have a lot of virtual clients. I use my Zoom, schedule
Okay.
private Zoom meetings, and share my screen and actually go over your tax return with you, show
Mhm.
you where your income and expenses are and what you could do different for the next year. So we cover all of that before I
That's
file
great.
anything. Yeah.
That's great. Okay. The next question is, if you have received death benefits, are you supposed to be paying taxes on that? Does that show up as income? Like if someone passes away and you're the recipient of the insurance money, is that something you're um, required to pay taxes on, or is that just a benefit?
It, good question. So at the end of January, all companies are required to send you tax forms. So if you receive a form for death benefits, you should get a 1099 for it if it's
Uh,
taxable. And even if
right.
it's not taxable, definitely reach out to the company that where you receive the benefits to confirm if they're sending you that
Uh-huh.
income tax report just to cover yourself. Now, a lot of times they'll still send it to you and we put it on your return and it's not taxable. So a lot of times you still have to report your income, but then it'll let you know whether it's taxable or not, and we would cover that.
Oh, great. Great. Okay. And if you don't mind, just one more question.
Not at all.
If you end up using one of your, I have an adult child that actually is in business with me. If I'm paying him and he's also filing his own taxes separately, will that work out?
Definitely, that individual would be a contractor. So
Mm-hmm.
you would put that income under contract labor expenses. So, and then you would need to issue them a 1099,
Uh-huh.
non-employee compensation form, so that adult child can claim that income on their personal return as income. They got to pay taxes on that money because you're writing it off as a business expense, so it's lowering your tax liability, right? But
Right.
somebody got to pay taxes on that money, so you'll have to issue a 1099 to your adult child, or it could be anyone else that you put on payroll or do contract work with.
Mm-hmm.
Um,
Mm-hmm. Okay.
yeah, you'll have to get them a 1099. And there's a site that you can use that and it's really easy to use. You'll put in their basic information. Of course, you'll need their social, and you'll put in what you paid them for the year.
Yeah.
And it actually electronically file that 1099 non-employee compensation form with the Internal Revenue on your behalf. I think it's like
Uh,
$3 or $4 per 1099 you need to do, or per person.
uh-huh. Okay. Well,
Yeah,
I
it's a
guess that,
pretty cool. It's a pretty cool tool. I use it for a couple of people. I do use for contract work.
okay. Okay. So I guess that scenario works out better if the child is underage.
Well, you will still give them a 1099. You'll still give them a 1099. But the difference is, let's say that child is under 18.
Yeah.
Um, and let's say say it's your child. You're still going to give that child a 1099 up to that single standard amount, right?
Mm-hmm.
Based on, the duties and roles, that you assign to them, and it's worth that amount. You still don't
Yeah.
give them that 1099, and that child's still going to file a tax return. It's just the difference is when you file that return, you're going to, because they made more than $1,500. So by law, they have to file a return because they made more than $1,500.
Mm-hmm.
The
Okay.
difference is the difference is when they file that return, you're going to check that child can be claimed on someone else's return.
Gotcha.
Yeah.
Gotcha. Okay.
Yeah.
All right. That worked. Okay. Well, thank you very much. I appreciate it.
Oh, you're welcome.
And we'll be in touch.
Sounds good. Thank you.
You're welcome.
And let's see if I can find that 1099 link. Is so cool. Let me see if I can find that real quick. Anyone else? Any questions? All right, Pastor Dukes, back over to you.
All right, I just saw one question on there, say, how do you get, well, the person was asking how to get access to the Excel sheet that you use, and that's basically on your website, correct?
That is correct. That's correct. It's on my website. Let's see. And let me do that. Let me put my website in the chat. So you'll have it.
All right, well, as she put in
So
the web,
that's in the chat. And then I'm going to find, if you want to check to see if there are any other comments or questions, while I find this 1099.
Let's see here. No other questions? We did the excellent job.
Okay.
Um,
And that was you, Joe. So, okay, Joe, if you don't mind, send me an email and I'll send you back that that link to the 1099. How to do that. It's real simple. Like, I'm very impressed with that thing. It's
there's one
awesome.
question I noticed. Let me go back to her. Do they have to log in on the website to get the spreadsheet? No,
No, you do not have to log in.
no.
Just
Yeah,
click on that second tab that says tax services and scroll to the bottom.
right. And uh, Zelly, she said, if you haven't filed in the last year, should she file this year, then file the past year? I don't know.
If you have all of your documents for the 2022, I strongly recommend filing the 2022 first and then file the 2023. Because once tax season open up on January 29th, you can go back and file your previous returns electronically. So you'll be able to do 23, 22, and 21 electronically. Anything older than 2022, 20, anything, so 2020, did I say that too many times? 2020. So 2020 and older, those will have to be mailed in. But you can always file your returns.
All right. Well, I believe that's all the questions is in the chat. We wanted to thank you once again for taking your time. We know that you're starting to become very busy, and those individuals who would like to contact her. So I'm sure she'll take great service. She'll take care of you. I highly recommend her. She's just such as a great person. And it's a pleasure of knowing her throughout these years. But I thank you personally, Elaine. I know that you're busy, but we all, and by we being blessed to you, we know someone will be able to receive great service, because it's nothing like having a good account. Once again, thank you so much. You can have the
You're
final.
welcome. You're welcome. I actually found that that 1099 electronic document, just waiting on it to pop up, and I will post that in the chat so you all will have that as well, in case there's others that need to file. That one is let's see. This is the website. It's called eFile 360. Can you still see my screen?
Yes.
Okay, perfect. So this is the site. And like I said, just it's really simple. You'll create an account and you'll fill out the information. It's any form, but definitely you'll have the 1099 NEC, non-employment compensation. That's the one you would want to use when you're utilizing contract support work for your business. And I will drop that one in the chat. So. All right, and that's pretty much all I have.
All right.
I would like to thank you all for this opportunity. As Pastor Dukes know, I am very passionate about taxes. This is something I do. I've been doing taxes over 22 years. I mean, I just get excited. I even read the publication, so it's crazy, right? But I love this stuff.
Well, we thank you for taking the time, and let's enjoy the rest of your evening, get some rest, self-care,
Right.
yourself, and thank you for the team coming out for this evening.
Okay.
Okay.
And what I'll do, Pastor Duke, I'll once this finished processing, I'll send you the recording as well, so you'll have it.
All right. Thank you. Okay.
Thank you. You all have a great day.
You too now. All right.